Hello and welcome to the weekly commodity market update. I'm Brownfield's Will Robinson, joined as always by the University of Missouri's Ben Brown. Ben, how's it going?
I'm good, Will. It is cold here this morning. I woke up and it was below freezing, well below 30. But driving into work this morning, it was a beautiful day. The sun was starting to come up. We had frost on the ground. So it's going to be a really nice day. But I put my winter clothes away for the year. So I'm a little irritated, but I don't think it's going to last too long. Maybe a little bit of warm up at the end of the week with some rain. So
Yeah. Well, Ben, you know better than that in the Midwest. Before we get to summer, you never know what's going to hit in the spring. So, yeah,
that's right.
yeah. And then over the last week, had a lot of storms and winds and tornado damage. So, hopefully, everyone across the Midwest is having a better week this week and staying safe out there. But looking at the markets, we just saw some small adjustments across most of the week. I give a quick rundown here for the nearby corn contract, the May 24 contract down 4 cents in the week at 436. Nearby soybeans up 7 cents at 11.87. The soybean oil on a cents per pound basis for May up 2.11 cents at 48.70. The soybean meal by the short ton for May down $6.20 at 331.90. And then the 2023 or 24 May wheat crop down 4 cents at 542. And then finally, May crude oil up $4.46 a barrel at 81.60. So, Ben, mostly just light losses on a lot of things, soybeans, some slight gains. So looking into this week, where are we standing here looking at some market pressures?
Well, so it was that soybean complex right there in the middle of your rundown that I think was probably the most interesting. Last Friday, we got the National Oilseed Processors Association's report for their membership of how many soybeans they've crushed, and not only soybeans, but canola and all sorts of things. But soybeans is what we follow typically here. And they reported that their members crushed 186.2 million bushels of soybeans in February. That was a new monthly record for February and above even the most bullish of estimates for that soybean crush number. That really helped provide a little bit of support to the soybean complex, or at least the soybeans, the whole soybean market there. Soybean oil use, implied use for the month of February was at a new monthly record as well, over 2 million pounds, 2 billion pounds of soybean oil used in the month. So that also gave some strength to the soybean oil market, as you mentioned. But the glut of soybean meal that we've seen come onto the market is starting to weigh on that soybean meal complex. So that to me was the big thing there in the middle of your report, was the movement that we saw in the soybean complex.
Well, in talking about the support from that NOPA report last week, even though that has been largely supportive, we've only seen a small adjustment week over week looking at that soybean complex overall. So, it's fighting for support, but it's still, kind of tough to keep that footing, it seems like.
Sure. Now that we've been through February, that's a full 6 months of the marketing year, the first half of the marketing year for soybeans. That puts cumulative crush, at least from NOPA members. Again, we assume that that's roughly 95% of U.S. soybean crush, so we can make some adjustments. But that puts soybean crush for NOPA members for the first half of the marketing year just over 1 billion bushels, 1.1 billion bushels. That's already up 68 million bushels from last year, or 6.5%. USDA is currently showing a 4% increase in cumulative crush. If we maintain these paces, we might have to see USDA, raise their crush estimate another 50 million bushels or so.
So all that to say that, at least the soybean market is seeing a positive on the crush front there. But, looking across the board at some other areas, soybean export volumes were down on the week a fair amount. What was it? Just under 14 million bushels of exports down on the week from last week of nearly 23 million, or just over 22 million. So, Ben, as you look at the general setup of the soybean complex as a whole, there's some optimism there, but also a little bit of, lower trade comparatively. So where do you see the soybean complex as a whole moving forward?
Well, you mentioned the soybean exports. It was good, or it was nice, I guess, maybe to see, China come into the market and represent about 80% of the soybean shipments from last week. So China, again, taking big shipments of soybeans. The problem on the soybean complex, and especially in that export market, is just fresh export sales. U.S. soybean export sales were reported at about 13.8 million bushels last week. That was down from a prior week's volume of 22.5 million bushels. It was also just slightly above the 4 week rolling average. So a little bit better on the export sales than what we had been seeing, but still not really enough to justify, even maintaining the soybean export a number that we currently have to work with for this marketing year. So that is continuing to be a wet blanket, or at least a drag on the soybean, the old crop soybean picture. If you really want to talk about where I think there's a positive, or at least a potential, out there for the soybean market, it's in this acreage discussion when we think about new crop corn and soybean acreage. I do actually think that there is a chance that we maybe move a few more corn acres a few more corn acres into the picture at the expense of soybean acres and some other small grains in the northern plains. And so I think that has the potential to be the one thing out there that can kind of turn around the soybean market and provide a little bit of a spark.
Well, in talking about the acreage picture for this new incoming crop, we've gotten started planting in different parts of the Midwest, depending on weather, obviously, and the dryness of your area. But Ben, even with the recent, moisture coming in, we're still kind of starting out in a general lack of moisture. I know the Western Corn Belt, especially, kind of starting a little bit behind the eight ball when it comes to moisture. So what are your expectations as we get rolling into this planting season for how quickly things might go in and where we're starting at?
Sure. So, I mean, this planting discussion's heating up rapidly. Last week, we started to get private analyst estimates come out about acreage for 2024. Allendale, a firm that has been in this business for a long time, I think really shocked the market when they came out with even higher corn acreage, a couple million acres more of corn acreage than where USDA was. Again, USDA is kind of the first batch there at the Ag Outlook Forum in February. And then Allendale showed just a couple million less in the soybean complex. And that really, I think, started this discussion and is now getting people to think, hey, maybe this warm weather that we've seen here the last couple of weeks is really going to encourage some more corn acreage, even though profitability seems to favor soybeans. We're hearing of some shortages of fertilizer in some very acute areas of the region, and people saying, hey, I can't get the fertilizer, I'm going to switch to beans. And so, we could see a few more corn acres in parts of the region than what we anticipated because of this dry weather that you were mentioning in the Western Corn Belt.
Well, Ben, you talked about a little bit of that kind of push and pull dynamic between the corn and soybean complexes. So, you're seeing that dryness really favor that early corn planting, even though we are seeing, relatively low corn prices as compared to the last couple of years. And, for soybeans, maybe more of an opportunity to get some profit there. And, but still, looking at how, producers want to hit that market, if there is that opportunity to get that corn in, a lot of them are going to jump at it. But moving forward, if that continues to develop and you start taking away maybe some soybean acres, do you think that adds support within the soybean complex or enough to be notable and then does the opposite to the corn market and pushes it down even further?
Yep. Exactly. And that was why I think I said that this is probably the one spark to the soybean market that we could see coming up. Domestic demand has been strong. I look for that to continue. But if we're looking for another bullish factor for the soybean market, it could come in the new crop soybean acreage.
And Ben, I think the fun part, maybe I don't know if fun is quite the right word, but when we're sitting here in mid-March and you look at the acreage expectations for these crops and how that's going to play a role in the market, when it's all said and done, it's a long growing season. There's a lot of things that go into it. You see maybe dryness in June, July, or August, and that changes the dynamic of the market, especially in those June and July months. So, just because we're seeing, shifts due to acreage now, it doesn't mean that corn or soybeans will be, automatically more favorable than one or the other. It really all depends on weather through the growing season.
Sure. Yeah. Soybeans, were favorable last year as well in large part of the Midwest. But when we got around to harvest, soybean yields especially were hit hard. There was some insurance support that we saw, but soybean yields relative to corn, I think were hit harder in certainly places like Missouri and eastern Kansas last year. That reduced the profitability when you take into account the yield changes.
And then, Ben, coming up this week, we have the Fed is meeting, another discussion there. Obviously, well, I don't want to say obviously, but the expectation is that there's a very, very small likelihood of lowering interest rates coming in the nearby future. So what are your expectations for this meeting, and what do you think is really going to come of this?
Well, I think you're right. I don't think we're going to see any change in the short-term borrowing rate. What's going to be more of interest to everybody is 3 times a year or quarterly, so I guess 4 times a year. The Federal Reserve releases this dot plot diagram. This dot plot diagram basically shows the position of individual committee members in terms of what they think in terms of expectations of unemployment and really a short-term borrowing rate are going to be. So the last time we got a dot plot was in the December meeting. We'll get another dot plot coming out this week after their meeting on Wednesday. And that'll give us an indication of if individual members have changed their positions and moved, and where we see the majority of members, how many interest rate cuts, if interest rate cuts, we see from the members themselves. So I don't expect a change in interest rates this meeting. There's really not the statistical data out there, or there's not the evidence that the Fed is looking for to go ahead and cut interest rates. But be careful of that dot plot diagram and certainly what members are saying afterwards, because that could signal any changes in terms of how many interest rate cuts. As a reminder, initially we were talking about 3 to 5 interest rate cuts in 2024. Do we see them back away from that number, that many interest rate cuts as we look ahead?
All right, Ben, it's always a pleasure having your knowledge on the program. But looking ahead into this week, what should farmers and ranchers really be paying attention to?
Yeah, so we got that Federal Reserve press conference and dot plot diagram chart that's going to be released at 1 p.m. on Wednesday. There is a press conference that follows at 1:30 p.m. Look for the stock market and look for the broader macro economy to take that, and then we could see some pressure maybe on some of the ag commodities, depending on what the result there is. Thursday, ag export sales report Thursday morning. Then Friday, we have cattle on feed at 2 o'clock, and then the CFTC, or those managed money trader accounts, disaggregated accounts, on Friday afternoon at 2:30. And that is our week.
And then just for the listeners out there, Ben, you're talking mostly in Central Time there, correct?
Yes, all those are Central Time. Yep.
There we go. All right. So, viewers, listeners, if you'd like to learn more about us and what we do, you can check us out at brownfieldagnews.com. You can also check out our sister program, the Weekly Livestock Market Update, also on Brownfield. Ben, thanks again. I'm Will Robinson on Brownfield.